The price Americans are paying for rent has absolutely skyrocketed in the last 4 years. In fact, according to Zillow, that number is up 29%. That's right. Americans are paying 29% more now versus before the pandemic. And that's what we're going to look at today. We're looking at Zillow's report on rental prices, where they are, and maybe where they'll go. And I'd love to know from you. Comment below in this video. Are you seeing rents skyrocket? Are you paying a lot more in rent now versus 4 years ago? Or maybe you're lucky and your landlord hasn't raised your rent. I'd love to know. Please comment below. And do me a favor, like this video and consider subscribing to my channel. I'm Ohio Real Estate. My name is Jason Ferrier, and I love making these videos to help you understand what's happening with not only the housing market and buying, selling, investing in real estate, but also rental prices. Because if you happen to become a landlord, or you need to rent out your house or go find a house to rent, this video should help you. All right, now we're going to look at two articles though. We're looking at one from Zillow and one from a company called Resiclub Analytics, because the Zillow article only covers all rent, doesn't actually break down multifamily and single family rents. And that's very important as we go through this data. All right, here we go. On to the Zillow article. So Zillow's article is called Pandemic to Present, the Evolution of Rental Prices and Affordability. They put a housing market update out every month and a rental update. Today, we're looking at the rental update. So you can go to my description, click on the link, and look at this article yourself. Zillow has fantastic data. In fact, something like 2/3 of all home buyers and sellers get all their information from Zillow about the housing market. So people like Zillow. January is often a month when asking rents begin to rise, following a period of stagnation or even decline throughout the winter months. As we move past the holidays and look towards spring, we expect rental demand to increase. However, the key issue facing the rental market is whether this growing demand will be sufficient to absorb the influx of supply. And what they're talking about here is there's a massive amount of multifamily construction coming online in the next year. We had a huge year in 2023 where a ton of supply came online, and now more apartment buildings are being finished. I'm sure you see them throughout your area. And because there's a ton of new supply, in fact, there's actually 670,000 units coming online in 2024. And that's more than we've had since Richard Nixon was president. Yeah. So now they're saying, hey, with all this supply hitting the market, this supply is going to drive down prices. And Zillow's claiming we've already seen that drop in rent prices overall, and in some markets dropping quite a bit. Since the beginning of the pandemic, rental prices have surged 29%, averaging an annual increase of 7% over the last 4 years. However, nearly 2/3 of this increase happened in 2021 alone. Following this sharp rise, a boom in apartment construction and a slowdown in economic growth have taken the heat off. Currently, rents are up 3.4% compared to last year, reaching $1,958 a month, according to the Zillow Rent Index. This annual growth rate is significantly lower than the pre-pandemic average of approximately 4.1% observed in 2018 and 2019 by more than 70 basis points. So they're pointing to the fact that, yeah, apartment rents went up 29% in 4 years, but now they're increasing about 3.4% per year. So keep that in mind. They're not, even though a lot of people are saying rent prices have crashed or they are crashing, and soon you'll be able to go to your landlord and basically say, hey, instead of you giving me a rent increase, you're going to give me a rent decrease. I'm going to pay a lot less in rent. By the way, comment below. I'd love to know if that's happening for you. Are you able to negotiate a much lower rent rate versus last year? Or are you still getting an increase? Because the point is, at 29% growth in the last 4 years, now if you're increasing 3%, you're not crashing, you're just increasing slower. So if I've gone up 29% and now I only increased 3%, well, okay. If I'm a landlord, which I am, I mean, it's easy to understand that rents have spiked, and because they're not crashing, at least not yet, it's easy to understand that since rents have gone up 29% in 4 years and now still going up, we may not see any light at the end of the tunnel. The rent you're paying now may be the lowest rent you're going to pay forever. So let's get back to the data. Rents are up from year-ago levels in 47 of the 50 largest metro areas. Annual rent increases are highest in Providence, Rhode Island, Hartford, Connecticut, Cincinnati, Ohio, and Louisville, Kentucky, and Boston, Massachusetts. You can see, I mean, there are some areas where, we're still tracking the same rent increases that we saw during the pandemic. Remember, they went up about 7% annually during the pandemic, during those 4 years, from 2020 through last year or 2024, however you want to look at that. And now, areas like Cincinnati, Hartford, Providence, and Boston are still around that same rate of increase. So if you live in one of these cities, you're seeing your rents continue to go up. Rents fell on a monthly basis in 16 major areas, including Austin, 0.5% drop, San Diego, 0.4% drop, Buffalo, 0.4%, Dallas, 0.3%, and Riverside, California, 0.3%. So not huge drops. I mean, to mitigate the 29% increase you saw in rent, you're going to have to drop a lot. And you're not seeing that. Now they look at the top 50 metros and where rent is right now and where it's gone year over year and even month over month. They look at some of these areas and you can see there's a ton of blue. I mean, go all the way up to the top. Providence, Rhode Island, Hartford, Connecticut, Cincinnati, they're all up. And now let's scroll down and find some that are actually down year over year. Well, I'm trying here. And I've got Portland, Oregon is down. San Antonio, Texas is down. This is year over year, not month over month. Austin, Texas, down 2.6%. So unless you're in these three metros, year over year, you're paying more in rent than you did last year. Definitely not a crash yet. I'll keep looking for the crash. Maybe I'll find it. But now let's look at month over month. And that's on the right-hand side. And that's in the orange. 0.4% increase in Providence, Rhode Island, Hartford, Connecticut, 0.1%. Scroll down here. I've got Cleveland, Ohio. I'm in Ohio. That's 1.2% increase in rent. I'm closest to Columbus, Ohio. It's up 5.4% year over year and 0.2%, just slightly up month over month. Okay, so we've looked at some of the data that Zillow provides, but this next article is much better. This article is from a company called Resiclub Analytics. Resiclub is ran by a guy named Lance Lambert out of Cincinnati and used to work for Fortune magazine, provides insight that you won't find anywhere else with real estate data. And a lot of times he gathers real estate data and chops it up so that you can actually make sense of it. And it's not the same old story from like Zillow that we just looked at. So the name of this article is Charting the Changes in Apartment versus Single Family Rents Across Top U.S. Metros. So what Lance did here in his articles, he went into the fact that multifamily rents, because of this huge supply of multifamily construction, has an opportunity to soften more so than single family rents, because people, generally speaking, want to live in single family houses. And that's one of the reasons why institutional investors or investors like me like duplexes or single family houses, because they offer more space, more privacy. You're not in a massive apartment complex. And here's the telling stat. You got to pay attention to this, folks. National multifamily rents rose 2.7% in 2023, while national single family rents rose 4.6%. And he gets all this data from Zillow. So he takes the data we just looked at on Zillow and chops it up differently to say, hey, what's happening with just the multifamily market or the single family market? Because they're much different. If you live in an apartment now, if you've ever lived in a single family house, you know they are much different. Let's read a little of Lance's article. There's no question about it. The rental market across the country has softened compared to the pandemic housing booming days, when national multifamily rents rose 15.8% in 2021, while single family rents rose that year by 13%. However, the softening hasn't been uniform. Multifamily rent growth has softened more than single family rent. And in some regional pockets, multifamily rents are experiencing outright declines. Indeed, according to the Zillow Observed Rent Index, we just looked at that, national multifamily rents rose 2.7%, while single family rents rose 4.6%. What he's saying is single family rents are still increasing, and they're not decreasing in the markets that are having some softening as much as multifamily rents. So these charts that Lance puts out are fantastic. So the first thing we're going to look at is the annual shift in multifamily apartment rents by market. Keep in mind, these are just apartment buildings, not single family houses. So let's start and look at, hey, where is the US overall? Well, you can see the increase they had year over year. As a nation, we had increases here for multifamily rent. It actually decreased 2% in 2020. But then in 2021, multifamily rent went through the roof. In 22, 6.5%, still more than the historical average. And now in 2023, it was 2.7%. That's how we ended the year. So nationally, 2023, 2.7%. So let's look at some of these cities. And let's pay attention to the highest amount of increase. And then let's look at 2023. So Los Angeles up 13.3% in 2021, and now only up 1.3%. Not too shabby, right? Chicago, major rent area, 9.7% in 2021, now up 5%. Let's scroll down here to some people that had some amazing increases. Miami, Florida was up 29% in 1 year in rent. In 1 year, not 1 year, 29%. Now they're up in 2023, they ended at 2.3%. This is interesting. San Francisco in 2020 had a drop of 11% in rent. Let's look at some other areas. San Diego, California, people love to move there. 18% increase in rent in 2021, now only up 2%. Let's look at some that are actually dropping this year. Orlando, Florida, it was up 24% in 1 year. In 2021, it was up 24%, and now down 1.3%. So that definitely had to change. But I mean, think about that. In 2 years, you had a 30% increase in rent. It's just not sustainable, right? At all. San Antonio, Texas, 14% increase in 2021. Now a drop of 0.8%. What's interesting is some of these areas are still increasing a lot. I mean, look at Cincinnati. It was up 4.1% in 2020, then up 10% in 21, 9% in 22, and 6% in 23. So there's no doubt, like an area like Cincinnati, I think we just saw that's up 6% this year so far. So rent is no doubt increasing in some areas, just like it was like during the pandemic. I mean, it's still going up through the roof. And I think a lot of that, and comment below what you think. Tell me if you agree with me or not. And if you don't, that's okay. I want to hear your opinion. So rent in certain markets has continued to go up. And I think the reason why a lot of these rental prices continue to go up in some of these metros like Cincinnati is because they're so affordable. I mean, when you start off and your rent is like half what a lot of the nation pays, obviously there may be some room to increase. And those can increase a lot faster than areas where you're already tapped out. I mean, look at Austin, Texas, up 23% in 2021. Now in 2023 ended at negative 3.5%. So the question is, like, if you look at this chart and you go, where will rental prices go with multifamily? Well, some of these areas have massive amounts of supply coming online, and especially in the Sunbelt states. So like Atlanta, let's see where they are. Atlanta, Georgia was up 21%, then 2.2%, then down 1.4%. And if you have a huge amount of supply coming online, obviously that will soften prices because more supply equals lower prices, generally speaking. You should keep in mind, though, that a lot of these apartments, in fact, all of them that are coming online are brand new. If you're a developer or you're an investor and you built a brand new apartment building, what are you going to do with that rent? Are you going to allow people to rent those apartments at bottom barrel prices? No, you're going to charge because you have to make your money for your investment. So because of that, all these apartments, or most of them, I got to imagine, that are coming online are going to be in the upper end of the price tier. These aren't bargain apartments, generally speaking. So I can speak from experience because most of the apartments, in fact, everything I own, was built before 1970. I don't own anything. I don't own any apartments at all, a duplex, a triplex, even a single family that was built after 1970. So a lot of the apartments and duplexes and triplexes I own, they are older inventory, older buildings that I've had to put money into. Nonetheless, they're not at the top tier of rent in the area, not even close. They're still affordable housing. And that, I think, is a great thing to be able to provide to people if you're an investor. If you happen to be an investor, comment below. I'd love to know. Are you in the affordable housing game, or are you shooting for that Grant Cardone A+ units? That's not me. I like providing affordable housing. It gives me a lot of satisfaction knowing I'm providing that to people, at the same time putting a little money in my pocket. You just got to manage them right, and you definitely got to buy them right. So let's get back to the data. So that was multifamily apartments. Now let's look at single family rents. So single family rents, unfortunately haven't softened as much as multifamily rents. And look at this chart, easy to see. Green is up, dark green is really up, pink, red, that's down. You don't see a lot of pink and red on this chart. So single family rents in Los Angeles, they were up 3.9% in 2023. Let's go back down and see what they were only up 1.3% for multifamily rents in 2023. So definitely a difference. Chicago, single family rents up 6.7% for single family in 2023. Chicago up 5% for multifamily. Again, a difference, a big difference actually if you're paying rent. Let's look at some that were down a ton. Like, let's go to Austin. Everybody likes to talk about Austin right now because it's crashing with home prices. So Austin, Texas actually is flat for 2023 with single family rents. And if we go to the chart below to look at the multifamily rents, it was down 3.5%. So that's a big decrease in rent. But now you're seeing the single family market in Austin is about flat. And because it went up, look at where it went. 5.5% increase in rent, 16% increase in rent in 2021, 5.9% increase in 2022. So even though it's flat in 2023, it's not like it's crashing with single family rents because, again, people like to live in single family houses. And you have to remember that with institutional buyers. A lot of folks want to say, hey, institutional buyers, I hope they go away. They're not going away, people, because they know single family houses are in short supply. Builders aren't building enough of single family houses. And because of that, it's hard to get the inventory. It's hard to get the assets. And when they get them, they know they're valuable. People want to rent them. And that's in the numbers right here. And I'll tell you, I have a few single family houses. I own more duplexes and triplexes and quads than I do single family houses. But those single family houses are easy to rent and they bring in pretty good money. And because it's one building, one roof, a lot of times it's easy to take care of. That's also why I like duplexes and triplexes and quads. They're all under one roof. You don't have multiple roofs going on. Okay, so some of these areas, like in the Midwest where I live near Columbus, Ohio, it doesn't matter what you have from an asset standpoint, your rents are still going up because Columbus is showing a 5.5% increase in 2023 with rents for single family houses, but had a 6% increase. If I scroll down, Columbus had a 6% increase in 2023 for apartments. The reason why I think that's happening locally here is there, quite frankly, haven't been a ton of apartment buildings constructed over the last 10 years. And so because of that, I don't think the supply was where it is in a lot of other metros. Now, we do have a lot of supply coming online in Columbus for multifamily over the next few years, especially this year. And that's probably going to soften rent some. But we also are experiencing a ton of growth because of things like Intel and the Silicon Heartland. A lot of people are moving into the Columbus and Central Ohio area. And even it's expanding out to Cincinnati and Cleveland. Rents continue to go up. It doesn't also hurt the fact that rents were affordable or relatively affordable, just like housing prices here before the pandemic. And that's changing right now. It's pricing a lot of locals out of the market. Why is the multifamily market seeing more weakness than the single family rental market? A major reason is that many housing markets are experiencing a wave of multifamily completions, which were financed during the period of ultra low interest rates and are now coming online. Yeah, I mean, rates for developers and investors have gone from like 3% to like 8% approximately. At least they have for me. So because of that, you're not going to spend the money on a big project now that rates are 8%. When they're 3, it's a no-brainer a lot of times. But now that they're 8, much harder. In 2023, the U.S. witnessed a surge in apartment supply, reaching the highest level since 1987 with over 439,000 units completing construction. A lot more supply is coming in 2024. According to the latest forecast from RealPage, a property management software company in the multifamily sector, 671,000 apartment units are projected to be completed in 2024. This would represent the highest level since 1974, the year of Richard Nixon's resignation. In all likelihood, 2024 will bring another year of more supply than demand, adding another challenge for apartment investors also confronting higher expenses and elevated debt costs, said Jay Parsons, chief economist for RealPage. Much of that multifamily supply is expected to come in fast-growing Sunbelt markets like Nashville, Austin, and Dallas. So I'd love to know from you, what do you think? Do you think rental prices are going to continue to tumble or soften? What I've shown you today hopefully shed some light on this, that, hey, single family rents aren't softening near as much. And there's a lot of areas where even multifamily rents are continuing to rise. And it's all about supply, folks. So look around your market. You want to know how to find a great deal on a rental property, just like buying a house or an apartment building. You have to think like an investor. So go out and look at the supply in your marketplace. Go to this article, get inside of Lance's data and find out, hey, if you live in one of these markets where a ton of apartment supply is coming online, that may be a signal that rents could soften. Now, are you going to go to your landlord and get a massive discount when you have to renew your rent? I don't know. You may want to try, but I'd love to know, comment below, if you've been able to do this. It'd be great to understand if you've been able to negotiate with your landlord and get a lower rent instead of seeing a rent increase. Now, I think all this points to the fact that real estate is a fantastic investment. You have to purchase it right, and you have to purchase real estate where it makes sense for you. But you can see the historical trend of rent increases year after year after year. And hey, if you have a year where rents don't go up and you can't raise rents on your apartment building or your duplex or even your house that you've rented out, not a big deal, because if you've seen rents increase year after year after year before that, or if you'll experience increases year after year, not a big deal. A soft month or a soft year isn't going to kill you. I would highly encourage you to invest in real estate. At least kick the tires, poke around, learn your market, because there's opportunities out there to invest in properties and receive cash flow, depreciation, and not only that, appreciation of the asset. Now, we probably won't have, or hope we don't have, a COVID type situation again, where rents went up 29% in 4 years and home prices went up 43% in 4 years. That's completely unhealthy. But if you look at the lifespan of your asset and over the long haul, I think you'll see that real estate provides a great way to invest and build for not only your future wealth, but generational wealth to come. Hey, so that's my video today, all about rent. I'd love to know from you. Comment below, what's happening in your area with rent? You keep seeing it go up. Are you renting? Are you a landlord, maybe an investor? And have you increased rent in the last few years? Anyway, I hope you got value and insight out of this video today. And please do me a favor, hit the like, hit the subscribe button for future videos about real estate. Until next time, see you on the next video.